Hey guys, welcome back. In today's video, we are talking about shorts running out, AMC over noise, the high potential squeeze setup, and many more in this video. First, we're taking a look at this. Noticing a big trend of high 24-hour volume and running out of shares to borrow during 24 hours. This won't last long. Tons of calls in the money at 1.5 and headed there quick. So multiple things to look at. Firstly, we're seeing how shares are indeed being borrowed, meaning that the demand of shares is still extremely high. So we're still seeing short sellers trying to suppress AMC. However, what we also have to know is that the availability, supply of these shares are getting increasingly harder for these institutions to borrow. Now, this could be a series of reasons. Firstly, we're seeing the liquidity stress, therefore they're failing to create more synthetics. Or we could be seeing that most of these firms who originally bought up AMC now don't want to lend out AMC shares anymore because they've realized that actually by allowing AMC to run, there is more profit to be made. And they understand that AMC's long term is obviously projected to be in the hundreds and higher. And so that's what they obviously want to look for. And this is why we're seeing the struggles from the availability and these short sellers not able to get their hands on shares. Now, we can already see because of this, we're seeing how AMC is up 4.69% today. It was still higher at one point. We saw the high of 1.4, but you have to understand we're still seeing suppression. First, if you take a look at the off exchange, it's at 70%. Now, this is still lower than what we've seen in the past, but what we have to understand is 70% is still very high. And there's a big reason for why they're doing this. Going back to what we said at the start, the calls going in the money at 1.5. When you take a look at the options data, a lot of call options at the strike price of 1.5 has been bought. So of course, if we see AMC go towards 1.5 and go in the money with these calls, you can expect the sort of pressure that it can create. And so as we see it get closer and closer, so today at the high of 1.4, as we see it get closer and closer towards that 1.5, we are seeing more and more liquidity stress. We're seeing that potential gamma squeeze, whether it's big or a small gamma squeeze, we're seeing that potential to happen. And what we have to understand with gamma squeeze is that it's going to put a lot of short sellers who've created these short positions down in these areas to be having a lot of stress to face that liquidations and of course more. And so that's why we're seeing the suppression. And you can see in the past before, again, this is why I said if you compare it to the past, it's not that high, but because on April 1st, this is the old screenshot, but we saw 91.47% of off exchange for AMC. Today, at the end, it was around 70%. Still high, but it goes to show the suppression that it's obviously going on. And there's a reason for why we're seeing the dark pool usage go up again. Firstly, for the last kind of 3 days, so for the Tuesday, for Monday, and for last Thursday, the dark pool was below 70%, and you saw how AMC reacted to that. And now today, as we see AMC go higher, the fact that we are seeing the 70% and still seeing AMC go higher, it really tells you about what's going on. And this could also mean that a lot more institutions are trying to buy right now, and they're buying these through perhaps their own routes, therefore not allowing other market makers to internalize these orders. And it really just goes to show that people are in need of AMC shares, whether it's shorts or longs. The shorts are in desperate need of AMC shares because they want to suppress. They can't afford AMC to go up. The longs, the institutions, they are also in desperate need of AMC because they understand now how much potential there is and they don't want to miss out on this opportunity. When you take a look at how well we're already doing for Q2, we're doing exceptionally well. And if we see this, we are looking at that it may in fact be the best month to date in the entire history of the box office. So this just goes to show how big we are seeing the box office right now. And again, AMC has been preparing themselves just for this because we talked about efficientizing their own operations. We talked about opening up new theaters. So we're going to be seeing more attendance, and along with this attendance, we're able to see more revenue and profit made per attendance than before. So the per patron revenue is going to increase and be a higher ratio than previous years. And so at a time like this, where we're seeing the box office number get bigger and bigger, it goes to show how well AMC is going to be. It goes to show the dollar per gross that we are making is going to be exceptionally well for AMC. Now, this is something that I've talked about in the past before, and we're seeing other apes talk about this as well. And I just want to bring it to here in terms of why we're seeing people buying AMC. You can see, controversial statement for me, maybe, but I believe in these times of great uncertainty that AMC is a safe haven investment. At the bottom, it has proven to be resilient with infinite topside potential, particularly as the excitement in movie theaters returns. Now, the reason why I say this is because I agree with this in the sense that we've talked about how the theater industry has already been deemed as the most recession-proof industry, if not one of the most recession-proof industry. And so is why we're seeing institutions, especially at times like this. Now, there have been good news today, which we'll talk about later on, but especially at times like this, where we're seeing mass volatility, we're seeing fears of recession, of a market crash, they want these safe haven investment. So therefore, they're buying into theater industry. So already AMC is included in that. Now, when we go into the theater industry and we talk about what we said yesterday, which one has the highest potential? Which one is the most undervalued? And which one is improving the most? When you ask these three questions, AMC pops up for all three. And so not only are we already in the safe haven investment industry, but we are also the diamond that's in this industry. And it's why I say that people want to view AMC and people are buying AMC. You can see the only R word I'm hearing now related to AMC is the word record, because we've seen how AMC is breaking records. Recently, we talked about how well the Mario movie has done, and especially how well the merchandises for these Mario movies have done. And this is the second best selling, just underneath the Taylor Swift film. And so this is how we talked about with how, as we see the box office get bigger and bigger, especially if we're seeing things like this, where we are able to use the movie to sell our own merchandises, this is only going to benefit AMC more and more. This is only going to increase our revenue more and more. And I want to bring this up because I really agree with this, which is it's amazing how it's a flaming turd at 0.9, but a technical setup at 130. Price changes opinions faster than fundamentals changes business. AMC over noise. And this is I think the thing I want to talk about. And a lot of apes would see this as well, which is a lot of us right now are not affected by the price. Whilst there are also a few people who are very vocal on social media who are talking about how AMC is a bad company because it's at a certain price. But you can see how that sentiment changes instantly. Just a few weeks ago, we were at 0.9 and everyone was calling, or not everyone, but the haters were calling it the end of the world. They were talking about how AMC is going to get delisted. And now, as we see AMC go to 130, suddenly we're seeing the group of people now come in who weren't here before to back AMC, but now are saying that AMC is the opportunity of a lifetime. And it just goes to show how sentiment people can be. And is why we have to focus on not just the price. Of course, the price is important, but we have to focus on the overall, the whole thing about AMC. And so it's why we've always looked at the fundamentals, why we looked at the technicals, why we've looked at the sentimentals and the macro, and all of these things is to understand where AMC is. And you can see how more and more people are trying to buy into AMC now because they've realized the opportunity as well. And you can see people make this argument about AMC and I laugh at it. Shorts made so much money, look at the stock price. What they ignore are the currently open short positions. They do not simply exit and walk away. They are here and have averaged down at these low prices. And it's what we've said. For these short sellers, firstly, we have to understand, if they truly have covered their shares, we would have seen AMC volume to increase. We would have seen AMC price to also go up with it. Because when you cover your shorts, you have to buy shares and the price will go up with it. However, we didn't actually see that, so we know that they've never covered their shares. What we also know is that from the liquidity, from the shares available for AMC shares, is that they actually can't get their hands on shares. And so, yes, there has been people who open up positions at $2.10. This is what we've talked about. Now, normally, if you have a short positions at $2.10 and you see the price go all the way down to 0.9, yes, you would be making profit. However, for AMC, it's a different circumstance because they can't actually cover these shares. What they have done actually is, in fact, then shorted again at 150, shorted again at 120. And when it went below $1, they shorted again because their hope is to continuously short AMC to bring it below $1, ultimately to get to the point where it gets delisted. But for them, it hasn't worked out. And so as we see AMC go up to 134 right now, you can see the damages we're doing to these short sellers. And this is why we're seeing now people saying that AMC could have a short squeeze potential that is extremely high. The reason for this is because we are seeing an increasing climb of the short interest on AMC. Now over here it says 25%, but we know the truth is obviously way higher than that. When you take a look at one of the biggest factors to why people are saying this, to why I also see this as well, is looking at the identical data. And what's scary about this is that how soon it can be. Now, I want to make it very clear. I don't want to give anyone a date. Yes, there is a date that has been given on here, but I don't want to give anyone a date. All I'm talking about is just how similar this piece of data is. This is looking at AMC all the way back in 2021. You can see the pressure, you can see the gap up in the price, you can see it falling to the low, and then the price moving, the gap up, and then a bit of decline, the pullback, and then boom, the price goes up. If we take a look at it in today's time, the decline of AMC, the price climbing up, the gap up in AMC's price, the small decline, and we're still facing a bit of decline. We're looking at almost the same identical data right now for AMC. And so this is what I'm saying with how if the data is similar, if we're looking at the same thing unfolding, you could be seeing the AMC squeeze anytime soon. Again, this isn't to hype anyone up. This isn't just to bring your excitement up. There is no date that's been given. What we are looking at is a similar piece of data, but typically similar piece of data tells us the same story. So if not, we're seeing the squeeze, we are seeing short sellers facing liquidity issues if we're seeing this whole setup being formed. You can also see here as well for AMC, it flipped the bearish gamma box to bullish at the close. This tells me there's little to no resistance left. Now, this essentially kind of backs up what we've talked about earlier with how essentially we're looking at firstly AMC going into that 150, going in the money for the calls, which is going to cause volatility. But secondly, talking about the similar squeeze setup back in 2021. And so what we are looking at right now is a lot of signs that are indicating AMC squeezing. And one of the things that people are talking about is when AMC reaches $60 to $2,500, just remember today, you had a chance to buy AMC at $1 and you didn't. And this is why AMC has ultimately been able to beat the short sellers. It's because people realize the opportunities, but also why we're attracting institutions right now, because they know that this is possibly the last ever chance they will be able to buy AMC at this price. The way I'm looking at it right now, and I've said this as well, and we already see this kind of 30-40% move up. When we saw AMC below $1, when we saw AMC at 0.9, I said that this was very likely the only ever chance we will get to buy AMC at this price. And since then, you can obviously see we've gone up by a very good percentage. What we've seen is obviously kind of a 43% move and going to continue to go higher. And so to me right now, what I also believe is that every day, the price that you're looking at on the screen right now may be the last ever time you'll see it. Just like we've seen how quickly it went above $1, we haven't seen 105 since. What we saw with 114, kind of 116, 120, we had yet to see it. And now we're seeing the same thing. And so it's becoming more and more scarce, and it's becoming, the opportunity is obviously still there. I'm just talking about how we're seeing the potentially the last opportunity. Now, one thing I want to talk about is, you can see from Stefan, as box office improves, the need for dilution to keep AMC afloat will vanish. Nevertheless, I believe CEO Adam's master plan is to make AMC debt-free by diluting during MOAS. Now, what I want to talk about this is talking about how, firstly, I feel like Adam Aron's plan is to be able to solve their debt issues without a dilution. And even if they want to do a dilution, they want to do it as little as possible. The reason why I say this is because we've not yet to see AMC file an 8K confirming the completion of the $150 million offering. So if what we're seeing with this, if what this is happening is true, it means that because they realize the price of AMC going higher, they want to utilize it and capitalize on this as much as they can. Meaning, if they're able to sell AMC shares at $2 instead of $1, that's what they will do. And they will wait for that possibility because that allows them to sell less shares while raising the same amount. Remember, they want to raise $150 million. So if AMC was $1, then that means they have to sell 150 million shares of AMC. But if AMC share is at $2, that means they will only have to sell 75 million shares. So you can see how that decreases rapidly. And that's what they want to do. Less desperation, more control. And so ultimately, I think that Adam Aaron doesn't want to solve the debt issue by diluting Warren Moas, but rather he wants to solve the debt issues just naturally, and then that will cause AMC to obviously squeeze. We can see here as well, if AMC has 1 trillion shares short, fake and all else combined, then these shorts lose a combined $10 billion each time AMC moves up 1 penny. Why haven't they closed out? They've had a low price. They can't apparently. And this is what we talked about. Now, again, we've yet to realize how many synthetic shares there are, but we know that there is a lot that's out there. We talked about 5 billion, talked about 10 billion, we talked about 50 billion. But the logic still applies. It may not be a trillion, but even if there's 5 billion, if there's 10 billion, you have to realize the amount of damages we are doing to these institutions every time AMC goes up even by 1 cent. And that's only going to increase. As we see already, AMC has gone up by 50, 40 cents, and it's only going to go higher by $1, $5, $10. And this is how we talked about with the squeeze. On the other hand, what we're looking at for GME right now is this GME coin at $100 quadrillion. Now, as we see this go up and up and up, it really just goes to talk about kind of the manipulation that's going on within the market. What we're also seeing is that every time we see this coin going up, it's because something's happening with GME. What we see is the GME swaps being opened, and this is going to expirations mid-April, what we talked about yesterday, the 17th of April. And as we're coming close towards that expiration, we're seeing this GameStop coin going higher and higher. Looks like there may be a link between that. What we're also seeing an extremely high dark pool of firstly a 90% short volume on GME. It goes to talk about what's actually going on. It talks about the pressure that's obviously happening. And it says that normally we are 55%, but recently we're 90%. And so going back to what we said with the swaps that are expiring, with the GameStop coin that's going up into the quadrillions, we're about to see something really unfold. What we're also looking at for Highcroft as well is that with the recent news, we're seeing a gold and silver breakout. And this is obviously very beneficial for Highcroft, which in return is beneficial for AMC and of course for the apes as well. Now, the big macro news today, I'm sure everyone has heard by now, but if not, firstly, this goes on to talk about how you shouldn't believe what these institutions says. So Morgan Stanley said they no longer expect the Strait of Hormuz to reopen this month. Now, they said this, and just a tiny bit afterwards, what happened is that President Trump announced a 2-week ceasefire with Iran, which then meant that the Strait of Hormuz was actually going to open. So you can see how a $2 trillion company can also be wrong on these things. And it just goes on about how these institutions are obviously not 100% and why you should obviously take it with a grain of salt always. But going back to this, and as we see this piece of news, we're obviously seeing oil dropping rapidly. You can see down 20% in 20 hours. But also we saw how the S&P 500 was trading just 3.5% away from a new record high, gold soaring to 4,900, silver is nearing 77. You can see how all of this is happening right now. And this is the big macro news today. And so we have to understand exactly what is going on. However, I don't want the stock market to kind of blind you with what's also going on other places. Firstly, there is still a big commercial real estate crisis as we see a fire sale in US for office buildings going for 90% off. This is something that is very concerning because it just looks like history is repeating itself. And then we're seeing how UBS and 5 major Switzerland bank partners are trying to test a Swiss franc crypto stablecoin. Now, especially with what's going on in the past before, firstly with the history of UBS, but secondly with how they're trying to use these stable coins, it just feels like they're trying to come up with new ways to get liquidity to fill up some of the bad positions they've made. As always, now this is F Financial Advice, so do take a guys to kind of sell. Make sure you do your own due diligence research, and I'll catch you guys next time.